Thank you very much, Nick. Good afternoon, everyone. Super happy to be here with you guys. My name is Daniel Passarelli. I'm the Managing Director for Digital Commerce at Worldline Latin America. I'm based in São Paulo, Brazil, and I've been working for Worldline for 8 months now. Prior to Worldline, I was head of digital payments at Elo, a local brand scheme in Brazil. And before Elo, I used to be the head of digital payments at Cielo, a local acquirer. I also had the opportunity to start my own fintech company, an online comparison tool for financial services.
Thanks, Daniel. Let's take a virtual long-haul flight away from the sunny afternoon in Sao Paulo and to the middle of the night in Western Australia. Nathan, can you tell us who you are?
Yeah, thanks, Nick. And Daniel, hi, guys. My name's Nathan Salisbury. I'm joining the conference from my home in Australia. It's kind of middle of the night over here, but very happy to be here on the panel with you all today. I've been working in payments for the last 11 years, and following the recent Worldline acquisition of Ingenico, I've started a new role as the VP of Channel Sales for the Digital Commerce Division at Worldline. I spent the last 5.5 years in the Asia Pacific market, most recently as the General Manager of Ingenico e-payments in Asia Pacific. And I guess, Asia's been at the forefront of innovation in payments over the last few years. So I really hope I can share some lessons and some insights from that region with you guys today.
So do I. Thanks very much, Nathan. So on our way back to Europe, let's have wheels down for a moment in India. And Ramesh, please introduce yourself.
Thank you, Nick. Hello, everyone. My name is Ramesh Narasimhan. I'm joining this panel discussion from Mumbai, India. I head the digital commerce business for Worldline India. I've been with the company for about 1.5 years, and prior to that, I spent over 3 decades in the Indian information technology industry. It's been a very exciting journey to be a part of the dynamic payment industry in India and working with a wonderful team at Worldline.
Great, thank you. And last but by no means least, Mike, who's inherited a Dutch flag, actually. Been away so long. Please talk about your experience and history.
Thanks, Nick. Yes, I'm Mike. I noticed that as well. So I've lost my English flag, and I'm now been in the Netherlands so long that I inherit the Dutch flag. I'm dialing in here from my attic in Amsterdam. So a little bit closer to Nick. I'm currently the global head of e-retail for Worldline. Previously in the Global Collect Ingenico family, I've been in the organization for 12 years in a wide variety of roles that's encompassed strategy, partnerships, product. And before I joined Global Collect, I also had the opportunity to work for an acquirer, for an e-com merchant, and for MasterCard. Thanks, Nick.
Thanks very much, Mike. So let's dive straight into the content here. I'm sure our audience is keen to understand our perspective on market entry strategies and some of the examples that we have and some of the things we've been doing. Obviously, the strategy, at least on the Ingenico side over the past couple of years, has been to seek out those opportunities to get access to local demographic groups on behalf of our customers, without necessarily the costly and complex overhead of setting up logistics in market. And this is kind of, I guess, the holy grail for anyone in e-commerce, being able to gain access to the superior performance and lower cost of some of the local payment preferences and being able to reach the local consumer groups. And of course, that's especially simple and effective if you're not delivering a physical good, so you don't have the logistical setup to consider. So turning to you first, Mike, what do you think are the key benefits of being local? And what are some of the examples of being able to be local for your customers without actually being physically onshore?
Yeah, so you touched on a couple of the topics, and as many of you in this session will know, that we focus on tier 1 clients. And by tier 1, we consider that from a size perspective to be important, but also geographic coverage. So for us, all of our clients will have a footprint in multiple continents. So they look towards us to help them to optimize their local payments, or to their the local offering that they have for consumers. And our advice and my particular advice will be on two areas. So I think, like you said, Nick, actually going fully local sometimes is a step too far. When you look at the cost around having a local entity, or the tax implications, it's a huge commitment. I would focus on how do you optimize the conversion rate. And we say in Worldline, we would like our clients to be able to convert browsers into buyers. So one of the ways we can do that is certainly by language localization and currency localization, still offering international cards, for instance. And this is one step that can be taken, certainly. And I think another aspect is not only looking at cards, but looking at in the geography, what are the consumers buying the goods with? So it's something that is a theme of today, but focusing on local payment methods, sometimes called alternative payment methods, which is a bit odd because in some of these countries, they're not an alternative, they're the main payment method. So it doesn't necessarily need a client to have a local entity in order to support e-wallets, real-time banking solutions, sometimes even local card brands. So these are the two elements that could be taken into account for a merchant when they move into geography. And because I think we need to think of this as ourselves as consumers. So we prefer simplicity. We want the reassurance and comfort of purchasing, even from an international merchant, in our preferred payment method and have that local look and feel.
Great, thank you. Over to you, Nathan. Mike's touched on many relevant points there. Your history, of course, in recent years has been focused on Asian digital economies, and those have developed in a very different way, of course, as we all know. What's your take on, let's say, non-card-led market entry strategies?
Yeah, indeed, Nick. I guess the development of the Asian payment ecosystem really can't be compared to the card-dominated Western markets, especially the US markets. I guess in Asia, there's been a real diversity of payment methods that have emerged over the last decade, and it's really been driven by the necessity to service underbanked or unbanked populations within Asia. So you've seen a whole range of different alternative payment methods emerging. And I guess as a company entering any market, you really need to take the consumer view, as Mike said, and having access to accept local payments is really just a critical first step. If you enter the market without the relevant local payment mix, you'll never see accurate representation of what your business could do in that market. And really, look, this is nothing new, but I guess from a practical perspective, it's important to understand how easily it can be implemented. Adding local payments on the Ingenico platform is pretty simple. You can offer most non-card local payments in local currency. You don't need an entity or a physical presence. For example, I think China's a really good example. If you want to sell anything into China, you can really easily cover the market by adding Alipay, WeChat Pay, and Union Pay, which is all supported on our platform.
In time? I think so.
Does that make sense?
I lost internet at home. Sorry, guys. So I was gone for about 60 seconds. So, Nathan, I'm sure you spread your wisdom, throughout the audience.
Very basic message, really, about adding payment methods, Nick. So yeah, feel free to move on.
Okay, let's focus on some real life examples. I mean, the theory is all well and good, but I'm sure every member of our audience has had some experience of going cross-border into new markets, and in the near to mid-term, we'll probably look at new markets again. So let's talk about some of the success stories that we've had with real customers, some of the examples that have enabled our customers to gain the advantage, particularly where they've been able to be local without being local, let's say. So Mike, I know you have some experience with the Russian market, for example.
Yeah, so just following on from myself earlier and Nathan, this is one that personally I've been involved with for a long time, so I'm really happy to talk about it. It was a project that we started in 2018, and when we talk about growth markets, this seemed to be quite an obvious opportunity for us. It's a massive market with more than 30 billion in US dollar sales online in 2019, and it's growing significantly, 17% year on year, which is significantly more than many mature markets that we service. In addition to this, we saw some data online, and we analyzed our own data, and we could see that, with our existing merchants, a significant number, and this was backed up externally, so 76% of Russian consumers, regularly shop cross-border. So we could see there was an opportunity there, but it was an opportunity that surprisingly only a small number of international online retailers had really made an effort to penetrate and develop their sales in Russia. So we looked at a bit more detail. I think this is mainly due to the challenges with localization that we touched on earlier. Setting up an entity, supporting the local payments, the logistics if it's delivering physical products, but also a lot of unknown elements around the regulatory complexities of storing data online, etc. So we took this as an opportunity, and we built a local solution, and we focused on the fact of how do we do this by bringing down some of these barriers, so our merchants wouldn't need to open a local entity in Russia, for instance. So we took some pretty significant brands such as ASOS and Nike and Alipay, and we connected them up through us to some local issuers in Russia. So that allowed us to process cards domestically. And of course, to my earlier point, if you're authorizing cards on a local Russian bank, you're going to assume that the authorization rates would be higher, and they are. We saw that varied between 2 and 7%. I think what was also interesting was that you see in other markets, there's a local card scheme in Russia, the Mir scheme, which has grown since 2015. So a lot of these cards have been forced issued to Russian consumers, which are employed by the government, so civil servants. And at the end of last year, there was more than 75 million cards in circulation, which is a significant country in itself. And we now see that today, 20% of all transactions taking place online in Russia are with a Mir card. So giving our merchants access to these local payment methods, as well as the local processing, has been a real success story. And we've processed more than 2 billion euro equivalent since we started the solution. And I think the key thing for a merchant as well, we're looking at something like a Mir card. You're tapping into consumers that you haven't really been able to tap into before. So we've analyzed this data, and approximately 15% of purchases using Mir are new consumers to our merchants. So I think for a business case perspective, that's really significant.
Yeah, thanks, Mike. A great example of how showing that local optionality can drive customer loyalty and even get you to new customers that you wouldn't necessarily have reached before.
Yeah, and of course, processing locally is it's common sense, but of course you need to say it sometimes. Processing locally is generally cheaper, so that's another huge opportunity for our clients.
Absolutely, and great to be able to be there without all the expensive setting up as well.
Yeah.
Ramesh, over to you. You're sitting on one of the largest markets in the world and fastest growing from a digital perspective. I know you've had some experience of taking some overseas brands local into country. Can you talk us through one of those examples?
Yes, Nick, I'll talk about one very loved furniture brand retailer from Scandinavia. Right? This retailer launched its first Indian store in 2018. And interestingly, their entry strategy was simultaneously on two footprints, both physical as well as digital. They started with the first physical store in the southern Indian city of Hyderabad, but also had their digital footprint ready so that they could cover the rest of India geography quickly. So the requirement in this context was to enable payments across multiple channels within these business cases, essentially web checkout, in-store checkouts, app checkout, call center enablement. And what we offered them is an omni-channel payment coverage with a consistent customer experience across all payment journeys. Our solution is built on a full service model covering all channels and enable the furniture retailer to introduce unique solutions, like, for example, IVR payment, link pay, faster payouts to support in-store and online transactions. And they also introduced a single interface connecting all channels we were able to help them with a unified dashboard. So we also supported their strategy to partner with large banks to introduce a co-branded credit card through our payment gateway system, and this helped them, significantly construct a loyalty base area. Lastly, we shared our best practices and learning with them with respect to the regulatory environment, basis our last 20 years expertise in payments. So if you see, Nick, what we can do for global companies wanting to come into India is exactly this. We can custom tailor-made solutions for them to enter into the market quickly and ensure that their payment journey is smooth. Once their entry strategy is ready, we can partner with them and get them up to speed very quickly in the country.
Thanks, Ramesh. Yeah, you mentioned the consistent customer experience there, of course, critical. That if you're a brand entering a new market, that there's a recognizable brand experience, across all channels. Really important. A clear demonstration of how important that is in order to generate that customer loyalty. So let's circumnavigate the globe a little and travel over to South America, Daniel. I think you have an example or two of similar kind of experience.
Yeah, indeed. 6 years ago, one of our clients wanted to offer their streaming services for over 200 million people in Brazil, accepting payments. And starting an operation in a country like Brazil can be such a challenge. At that time, their first options were set up a local entity dealing with all the market barriers that we all know, such as high costs, have tax implications, and all the bureaucracy. And just to give you an idea how complex can be entered the Brazilian market, according to Doing Business report that compares business regulation in 190 economies, Brazil are ranked in the position 109 on Ease of Doing Business Index. So the second option was the traditional cross-border solution through a global acquirer, which means not being able to accept the domestic cards. In Latin America, there's a common concept of domestic cards restricted for local currency purchase. Right. And even the international brand schemes like Visa and MasterCard can be issued restricted to purchase in local currency only. And it represents over 30% of market overall. And also with no access to local preferred payment methods such as boleto and installments, over 55% of e-commerce payments in Brazil are made in installments. So the decision was to implement a third option that would give to the merchant access to both local and international cards, accepting rates in line with domestic processing, and funds remitted out of Brazil and without setting up a local entity. And today, this merchant has operation in 4 countries in Latin America besides Brazil, and through the same money remittance platform. And in Brazil, 25% of all transactions from this merchant are pinless debit, a very relevant local payment method.
Thank you. And this, of course, is a welcome addition to what was the Ingenico solution suite from the worldwide side. I think very relevant for a lot of our customers. It's available to all of our customers wherever they're based, right, Daniel?
Exactly, right, Nick.
Okay. Thank you for sharing. So, I mean, in fact, the opportunity to appear local is not only desirable from a customer experience perspective, it's also critical in terms of reaching local populations, because a lot of the payment methods are inaccessible from overseas. We know, of course, that as we move out of the traditional Western card brand sort of markets, the names of Visa and MasterCard become less and less relevant and pretty much disappear by the time you're in some of the emerging tertiary markets, particularly those with large unbanked populations. The popularity of non-card payments, of course, is nothing new. The popularity of locally grown payment methods is nothing new. But I would like to ask the panel what trends you see in this area for the next couple of years. Maybe Nathan, you could start us off here.
Yeah, look, I mean, if you take like the macro view of Asia, you have more than 40 countries, a population of over 4 billion people, right? Almost half the world's population, and a huge percentage of the population are unbanked. So in Vietnam, for example, I heard in 2020, this year, that only 31% of the population has a bank account. So if you kind of look back over the last decade of digital commerce in Asia and the kind of emergence of digital commerce, there's been a wave of these cash-driven payment methods created to really facilitate the unbanked. And then basically digital wallet providers started to emerge with the goal of capturing the consumer relationships and potentially displacing the banks. So across Asia, it's known as the e-wallet wars. And they began with the main goal of capturing this market share. And if you look at China in particular, the mass adoption of the mega app ecosystem, so the Alipay and the WeChat Pay, basically incorporating the digital wallets, of course, it's really changed the life of the whole population. And I'm sure all of you have seen pictures of the market vendors selling food and offering a QR code for payment. This was like 3 or 4 years ago when we were talking about this, but the shift happened so quickly that the stats on Alipay this year is that they have more than 1.3 billion active users and have processed more than 17 trillion worth of transactions in mainland China alone over the last year. And what we see now is really the investment strategies from the likes of Ant Group and Tencent into e-wallets outside of China and around Europe, particularly in Southeast Asia as well. So really, we're starting to see a consolidation of the Asian e-wallet space, and I guess this is inevitable. From a merchant perspective, from a customer view, I guess the positives of the consolidation is really that you'll have an upside with the ability to extend the reach of your business to consumers and really simplify the process of collecting from what were traditionally quite difficult markets. I think the challenge will be really keeping the costs low for processing with these wallets as they gain more market share.
Yep, indeed. But I agree. The unification of some of the access to these wallets in different, what were very fragmented and discrete markets, I think is a real trend and will bring a lot of benefit to, let's say, extra regional merchants. I was thinking about Southeast Asia. I was talking a couple of weeks ago to the largest online travel agent in the region. And of course, it's been a pretty dismal year for them. But they've seen, as a result of the COVID constraints to travel, and associated with the fact that almost everyone is now just taking domestic trips. Interestingly, what they've seen is that I guess what's risen to the surface is a clear preference for some of the hyper-local payment methods. So whereas before people would take trips cross-border and probably pay with, it's either people who did have Visa and MasterCard or international scheme card availability and would assume that they would need to have that for check-in at a foreign hotel. Now, because people, for example, in one part of Thailand are going to another part of Thailand, or the same in Indonesia, a clear preference for those hyper local payment methods has become apparent. I think this is a lesson, this understanding of the local merchants around this clear preference, I think should be acknowledged by anyone trying to enter the region.
Absolutely.
Daniel, perhaps you can talk a little bit about what you've seen in your region.
Yeah, in Brazil, there are over 45 million people that do not have a bank account, and 130 million who don't own a credit card. And a relevant initiative that enables the consumers with no credit cards for digital payments is PIX, P-I-X, the fast payment solution created by Central Bank in Brazil for either peer-to-peer transactions and P2M use case. And it was launched in November last month. And after only 2 weeks live, the number were impressive. 34 million people and 2.2 million merchants registered on the service, and it was over 28 million transactions, generating over 4 billion euros. Has been interesting to see the regulator driven innovation and financial inclusion, and there's a good chance we will start to see the same trend in other countries in Latin America. Another good example is WhatsApp Pay. Brazil has over 100 million active users in WhatsApp, just behind India. And as you probably know, a few months ago, WhatsApp launched their peer-to-peer payment feature in Brazil, allowing their 100 million users to transfer money through WhatsApp chat. It's a seamless and democratic solution. And currently, the payment feature is suspended by the central bank in Brazil. The regulator said that had taken this decision in order to ensure competition in the payment system market. More likely, they intend to find a way to restore service in the country in the near future, following all the open banking and fast payment agenda from central bank.
Okay. You bring up a couple of themes there: the democratization of the digital economy, and actually also government-driven growth in financial inclusion. And Ramesh, it's fair to say that in your market, these are also very relevant themes, right?
Oh yes, absolutely, Nick. And the key driver really is financial inclusion, right? I mean, India is one of the fastest growing, second fastest growing digital economies. It's developing into a fintech payments hub. But clearly, in recent years, the government has been pushing an agenda of digital India, which has essentially accelerated financial inclusion of the unbanked population. And the government does it across the three pillars. They actually have an acronym called JAM. The J stands for No Frills Bank Accounts. The A stands for Aadhaar, or the Universal ID, and the M stands for mobile phone connectivity. So they use the three of them to essentially transfer benefits in a very leakage-proof, targeted, and cashless mode as far as the government subsidies are concerned. So when the Universal ID or Aadhaar was introduced, nobody knew it would change the way that how government services are delivered in India. This 12-digit unique identification number, which is issued by the government, has transformed lives of all Indians because it's become a bridge between the government and the citizens. Now, parallelly along with this, the quasi-regulator, which is called National Payments Corporation of India, launched two initiatives to get payments going. One is a scheme called RuPay, which is like MasterCard or Visa and caters to Indian markets, and the Unified Payments Interface, or UPI. The UPI is a real-time interbank payment system that allows sending or requesting money on a mobile platform. You can have any UPI client app on your phone, and you can link multiple bank accounts to a single app. Now, the UPI has picked up like wildfire in India, and the reality is that in less than 3 years, as of October 2020, UPI has crossed 2 billion transactions with over 100 million users. And now UPI fulfills more than half of all digital transactions in India. So the next thing that the Indian government is doing is to see if they can take UPI and RuPay international. So they've tested transactions in Singapore. They're exploring launching the UPI app in the Middle East, especially United Arab Emirates, because there's a large expatriate Indian population residing there. Singapore and the UAE have already opened their markets to India's RuPay card. And if the adoption of UPI system goes through, it'll allow Indian expats a very cheap alternative to send their remittances back home, right? And now several countries in Asia, Africa, and the Middle East are exploring, and working with the government of India to see if they can adopt UPI as a standard. In fact, what Daniel mentioned a little while ago, both Google Pay and WhatsApp Pay are some of the players who are riding on the immense success of UPI. They use the same rails and have been very, very successful in launching their payment services in India.
Thanks very much, Ramesh. So kind of a recurring theme of consolidation or expansion, sometimes led by big tech, sometimes led by government, but generally it is the sort of trend of consolidation within the payment space that from a very fragmented market maybe just 2 years ago. But Mike, the change and evolution in the payment space is not restricted to the tertiary markets, right? Or let's say the newest and fastest growing markets. And there are also evolutionary changes going on in Western geographies as well, correct?
Yeah, sometimes not seen as quite so exotic in the mature markets, but yeah, I mean, I would highlight a trend that's in a lot of the news at the moment, and I think one we should watch carefully, especially in 2020 with COVID, is the explosion of buy now, pay later solutions. So they've always, in their stomping ground historically been very significant in Nordic and Northern European areas where the sharing of credit information and the openness with ID, governmental IDs has always been there. So they've been hugely successful. But now, of course, we're seeing some of the bigger players like Klarna and Afterpay expanding out of their traditional territories into North America, the UK. We see another Afterpay firing up in Australia, hugely successful, and some other newer players such as Split It, looking at the credit card space. So I think for me, it's interesting to watch because in some ways these guys can be competitors to us. I think historically you see them as a payment product. You click during the checkout process which is not always very seamless, but some of the larger players now, you can see them as a checkout themselves. So do you click on a Klarna and then choose your payment product after that? So I think that's something to watch, to see how PayPal also adopt this with Bill Me Later. But clearly this is something, it's intuitive to me that this is going to grow over the next couple of years, even more.
Absolutely. So we only have a few minutes left, gents, and I don't know when the plumber will come back in and start beating the radiator again. We don't get international conferences on this stage, obviously. Since we only have a small amount of time, can I thank you for your insights so far, but can I ask each of you maybe to identify a trend that you see or an innovation that you see that you're excited about, that you feel will grow and be significant in the next couple of years? And let's try and keep it maybe to 60 seconds each. Ramesh, why don't you start?
Yes, Nick. So the COVID-19 pandemic really highlighted the critical importance of getting funds into the hands of those who need it instantly, whether it be individuals or businesses. And so the pandemic has accelerated the usage of this new trend called real-time payment methods in the country, right? The immediate payment system, which is called IMPS, or the UPI, the Unified Payment Interface I talked about, have revolutionized real-time payments in India. And as per a study published by FIS Global, India has emerged the global leader in real-time payments, handling 41 million transactions per day, followed by China and South Korea, right, in the Asia-Pacific region. So clearly, India continues to innovate with the launch of extensive business services on real-time rails, including IPO subscriptions, mandate management, and invoice in the box type of payments, which are all the standard offerings that we can give to any of the customers who want to come into India and partner with us for their payment requirements.
Thank you. Yeah, and clearly not just an Indian phenomenon, this real-time banking in the kind of bank-based instant payment type trend. Daniel, what about you?
Look, from my point of view, one of the most relevant trend in digital payments for next coming years is definitely the payments becoming invisible for the consumer. Services like Uber, Amazon, Spotify, and Netflix enables the consumer to experience the service without any contact with the payment itself. So this can be a game changer. A truly seamless experience. Therefore, features like card on file, tokens, card updater, and wallets are crucial for this kind of merchants and services.
Indeed. And staying with customer experience, Mike, what about your thoughts on this?
Yeah, I mean, I love Daniel's point. I mean, I think that the frictionless way of paying now is scary. You can buy stuff before you even realize it sometimes because the payment process is so invisible. I think for me, it's been talked about for many years, but I think in the last 6 months, you can really see it becoming reality, which is in the physical world, cash truly disappearing. So, now, having guys deliver stuff to the door, paying with QR codes, real-time banking, it's incredible. And I set myself a personal goal not to pay with any cash this year, and I made it to November. But with lockdown and being at home, then the window cleaner came round when I was here, and he only accepts cash. So I made it to November without making a cash purchase. So we'll try again in 2021.
Yeah, he needs to move with the times.
Yeah, terrible.
Thank you, Mike. And maybe Nathan, over to you.
Yeah, sure. Look, as Daniel mentioned, I think the streamlining of payments for recurring services, especially in the digital services space, has already happened. Really, I think on the retail side, there's some really cool independent checkout services which are coming out that basically give the consumer almost like seamless experience when purchasing for the first time from a merchant. It really breaks down the barriers to the first purchase with an online retailer, which is interesting, seeing that shift over into retail. I guess on the boring side of payment processing, what we're seeing is a lot of focus on conversion and optimization. And on the optimization side, there's a real laser focus from the biggest merchants in the world on maximizing success rates and reducing costs. So, I think we're pretty well positioned as Worldline, operating at a massive scale with our ability to extend connectivity into new markets and basically facilitate lower costs and better success rates. We talked about Russia earlier. That's a great example. India is another one. So, yeah, I think we're pretty well positioned there.
Yeah, I think a lot of the audience would recognize your point about optimization. I mean, especially in a year like this when a lot of budgets are constrained in terms of how much investment you can pour into bringing customers to your site on the advertising, on the marketing, SEO side, all that kind of stuff. Once they're there, you definitely want the best possible performance, and you don't want to be losing any sales from customers who are willing to buy your product or service. If I might add maybe a final thought, and it kind of ties in with what some of you guys are saying. First of all, yeah, the ease of buying is scary, Mike. I mean, we're going through Christmas shopping now. I've got 3 kids, and it's swipe to buy, and then the money's gone. I mean, it's in a second. But
frightened what's going to turn up at the door. What did I buy that I've even forgotten about?
That's right. But also, Daniel, you mentioned, all the, the trend for invisible payments, and obviously driven a lot by kind of the subscription economy. I was talking to a major online travel agent based in Europe just last week, in fact, talking to them about, again, where they'd seen bright like areas of sunlight this year amongst the shadowy darkness of the general travel sector. And they'd actually launched a subscription service where travelers could pay 30 euros a year and get access to discounted travel over the 12-month period. And they'd had, in fact, it was over 600,000 subscribers to that. And that's a business model that you never thought you would see in the travel space, but really innovative and just, I think, a sign of the times. Not just for companies that are digitizing for the first time, but also companies, that are trying to innovate to, shore up their loyal customer base, et cetera, et cetera. So Daniel, Nathan, Mike, Ramesh, thank you very, very much for your time. We did have a question, but I will, we've run out of time, unfortunately, to answer it. So please, if you have any questions, you can also reach any of the speakers by going to the speaker section on the app, clicking on the speaker's profile, and then just clicking on chat now. But it remains for me on behalf of the panel to say thank you very much to every member of the audience for your attention and your attendance this afternoon, this evening. Thanks very much, guys.
Thank you.
Thank you very much.
Thank you, everyone. Thank you.
Bye-bye.
Bye-bye.
Bye-bye.